Hello everyone, welcome to Joy with Daily News. My name is Nick and here's the news today. Nickel prices are facing downward momentum in the metal market in 2024. The prices for nickel in the market have grown in the past month but have fallen again. Therefore, surveys from the March 2024 metal market show mixed signals for the stainless steel market in 2024. According to a survey conducted in 2024, the stainless steel market faces a shaking position in the metal market. It is due to the changing prices of nickel in the first half of 2024. Nickel prices have created a balance in the past month with a growing momentum of the market prices. However, nickel prices fell due to the bearish outlook in the metal market. The overall situation of the metal market faced a downfall in the demand throughout 2023. It is expected that the same situation will continue in 2024. The metal market faced less consumer demand due to a falling economy, other monetary tightening in various nations, and other economic problems. Experts analyze that metal prices will fall by 5% in 2024. However, they will attain stability by the end of 2025. The stainless steel market has improved prices and demand to date in 2024. However, the stainless steel market position still gives mixed signals. It shows a green signal with a particular growth in the demand graph, whereas the overall condition is weak in the market. Therefore, the stainless steel is expected to get chances for growth amid falling nickel prices in the market. Contrasting Mexico with Vietnam amid dumping concerns, analysis of import data reveals differences between Mexico countries like Vietnam concerning Chinese dumping practices. Vietnam import shows a preference for processed forms of steel, particularly cold-rolled coil and hot-dip galvanizing, which significantly outnumber the hot-rolled coil import into the U.S. This suggests Vietnam may be processing hot-rolled coil from China to circumvent tariffs, potentially disguising the origin of the material. In contrast, flat-rolled steel imports from Mexico do not exhibit the same skew. Hot-rolled coil imports from Mexico have averaged approximately 18,900 metric tons per month since 2018, with cold-rolled coil and hot-dip galvanizing imports averaging around 16,000 metric tons and 17,700 metric tons, respectively. Recent trends, however, indicate a rising proportion of hot-dip galvanizing imports from Mexico, comprising nearly 49% of monthly flat-rolled steel imports in nearly 2024, up from around 35% historically. This fluctuation underscores ongoing shift in import patterns across the steel market. Thus, while parallels can be drawn with Vietnam's situation, recent tariffs underscore the U.S. vigilance in its trade policies, particularly regarding China. American steel producer Cleveland-Cliffs Incorporation is set to acquire Canadian rival Stelco Holdings Incorporation for $2.5 billion. The transaction, expected to close in the fourth quarter of 2024, involves Cleveland-Cliffs paying $60 Canadian plus 0.454 of its own shares for its Stelco share, valuing them at $70 Canadian. Upon completion, Cleveland-Cliffs shareholders will own 95% of the combined company, while Stelco shareholders will own 5%. Stelco will continue to operate as a subsidiary of Cliffs, retaining its name. Stelco's facilities in Ontario, including the Lake Erie Works Steel Mill and the Hamilton Works for steel finishing and coke production, will add approximately 2.6 million short tons of flat-rolled products to Cliffs' operations. This acquisition aims to strengthen Cliffs' position in the flat-rolled market, enhance its product portfolio, and diversify its customer base. The U.S. has imposed tariffs on Chinese steel and aluminum products entering from Mexico to close a loophole in tariffs set since 2018. Steel products from Mexico now face a 25% tariff unless they are melted and poured in North America, while aluminum products with primary materials from China, Russia, Belarus, or Iran will face a 10% tariff. Chinese state media and experts say that impact on China will be minimal, as the US is not a major market for Chinese metals. The US mainly imports steel from Canada, Mexico, Brazil, South Korea, and Japan. The new tariffs affect only about 1.8% of total US steel import in 2023. China can diversify its imports to emerging markets and prioritize stabilizing economic ties with the EU amid tariffs on Chinese electric vehicles. In the first half of 2024, Ukrainian railways (UGES) increased iron ore transfers to Poland by 61.7% compared to the same period in 2023, reaching 2.599 million tons, despite a 45.5% decrease in ferrous metal transfers and a 13.7% drop in grain shipment. Overall cargo sent through Ukrainian Polish railway border crossing a total 11.06% million tons, a 36% increase. In 2023, UGES transported 148.4 million tons of cargo, with declines in iron ore and ferrous metals, but an increase in grain transportation. The Canada Broker Service Agency (CBSA) has completed a price review for concrete reinforcing bars, or we call Rebar, from Algeria, updating normal values and export prices for Spa-Torjasley iron steel industry Algeria. The review, covering October 1st, 2022 to September 30, 2023, is part of the CBSA enforcement of the Canadian International Trade Tribunal's order from June 4, 2021, addressing dumping rebar from Algeria, Egypt, Indonesia, Italy, Malaysia, Singapore, and Vietnam. And that's also the end for today's episode. See you in the coming news, and goodbye, good night.